let me be extremely clear. Not every foreign tax qualifies for the foreign tax credit. And IRS is pretty strict about this. So, let me explain. In order to qualify, the tax must be first an income tax. And whatever tax that was charged in place of an income tax. So, yeah, whatever name that I give you, as long as the income related tax, income tax. That's the qualification one. Okay? And of course, it must be a legal and actual liability. Okay, so that means you earn money from a certain foreign country, and that foreign country requires you to pay it, and you really did pay or accrue it. Okay, it's not some imaginary scenario. It must be a legal and actual liability. Okay, and the third thing is that it has to be imposed on you, not someone else. Okay, you can't just claim someone else credit for you. Okay, so yeah, this makes seems a little bit vague. Let me just give you some of the example here. So, for example, if you paying tax, say in Canada, or in UK, or in Japan, that usually qualifies because those are all income taxes. Okay, just as same as US taxes. But say if you pay say VAT tax in Europe, and or some sales tax in Asia countries, or maybe some if you're like holding property abroad, you may pay some property tax on say real estates abroad. So all this does not qualify. Okay, all this do not qualify. So IRS makes it really clear that those are not income taxes, so you can't use that for the FTC. Okay, and I know all of the viewers come from China, so let's talk about China. Okay, China's got a very special tax. Let me just write it down for you. Okay, so let's talk about China, since this comes a lot with my audience. Okay, so China's got the China's individual income tax. So individual income tax. So IIT. So the China's IIT is qualifying tax. So you know what? That's qualifying foreign taxes. So basically, this is like a monthly or annual income tax you pay on your wages, your salaries, or your business income in China. Okay? So you know what? IRS classify and recognize this as creditable. So you know what? You can use it. Okay? But as I said, just like any other, say Europe's VAT tax, China also got a value-added tax, VAT. So on the other hand, the VAT tax you see on say business invoices, or if you done some purchase in China, you got some purchases, and it's not creditable. Okay, so basically the VAT tax is classified as a consumption tax. So consumption tax. Okay, so that's clearly not an income tax. So just remember, you need to be an income tax in order to be qualified foreign taxes. Okay, and in China there are lots of taxes that it's not classified. So as the qualified foreign tax, for example, the D tax, or say you enter some contracts, there is a stamp tax, right? So as long as a stamp, there's a tax, right? And for example, as I said, some property tax that's not qualified for the credit. Okay, so if you say you're American entrepreneur in Shanghai, or say green card holders that working in Beijing, right? So you can claim the IIT that you pay as a foreign tax credit, but you cannot use tons of VAT that you paid on, say for example, you work in China, you got some tons of like goods and D taxes you pay, and even some property purchase. You know what? You can't use that as the qualified foreign taxes credit. Okay, really simple. So yeah, this as I said, there's also a good news, and once you master this, is unlikely going to be changed in the foreseeable future. This rule has been the same for decades. Okay, just one of the evergreen rules of FTC. Okay, And just if you just condense everything into just one single sentence, that is the only income taxes cut. Okay, really, really simple.